Welcome to the daily update, where I'll go over the action in the market for Thursday, October 30th, and we'll see how things look for Friday, October 31st. Happy Halloween to everybody. Well, we had more of a decline. Actually, when you look at the charts, we saw more damage done on Wednesday when the S&P closed virtually unchanged than what we did on Thursday. It is still shifting over more negative. We've lost the positive conviction in the short term, and anything that was looking extreme in the intermediate term, that's gone away now. And we have a very interesting thing. We have a confirmed Hindenburg Omen now, which is a negative thing, just like the name implies. And I'll show you that later. So, is the market getting set up to go through a difficult time? Pretty much everybody's assuming it's going to go up. Does that mean it's going to go down? We can still recover from this, but we kind of needed Thursday to be a positive day to get some of the weakness that was developing out of the way. No, it didn't really get to be much more, but then at the index level, that's where we saw more of a decline because the mega caps held things up in Wednesday's session. They didn't have a very good day on Thursday, even though earnings reports have been released. Now, as I record this many hours before the open, we're up pretty strong. We had Amazon and Apple reporting earnings, and the futures are up, looking pretty good there. But we were looking pretty good before Thursday's session, not as strong as we are right now, but we were looking positive, and then we lost that by the time the market opened. We ended up actually opening lower, and then things just kind of deteriorated. We're not trending right now either in the short or intermediate term. So if you go to my website, we're focusing more on sideways strategies where we're not really trending up or down. Now we're still positive in the bigger picture, and that hasn't changed. It's more in the short term and bleeding more over into the intermediate term where we're seeing some weakness coming in. All right, so at the open, we did have a lower open below S1, 68.55. Then we were able to rise up above S1. We hit resistance at the 68.75 level. Then prices chopped sideways between 68.75 to the upside and S1 to the downside. Didn't see an awful lot of conviction until later in the day. Afternoon, we saw late day selling. It took prices below S1. We closed just a little bit above S2. We were down 0.99% on above average volume, and we are still positive on all three time frames. Now, I use moving averages to determine that. We're still above the 20, 50, and 200-day moving averages there. Interest rates are going up so far anyway. Now, it's only been one day since the Fed cut rates, but the general tendency has been when the Fed comes in and cuts rates, we're seeing especially the 10-year yield starting to go back up. And you would kind of think the opposite would happen, but that's not what we've seen over the recent past, over the last year or so. And are we going to continue to see that now? We're starting to see the 10-year yield going back up. We're seeing a little bit of strength in the dollar, and those things together could end up putting some pressure on stocks. And of course, all the geopolitical things that are happening, and really not much was new in the way of developments. Still looking more positive in the background. We may be getting a bit of a pop because of that, because President Trump and Xi were supposed to actually make some kind of a final agreement about things, and the news has been positive coming out of that whole situation. All right, so some comments after reporting earnings. So after the close on Wednesday, we had Meta, Google, and Microsoft reported. Well, Meta was down 11.33%, and big company, they have a real impact on the index, so that was part of the reason we were underwater there. Google was up 2.45%. Then Microsoft was down 2.91%. So mega caps didn't have a good day on Thursday. They underperformed, and we're seeing more weakness again in small caps and mid caps. They really were anticipating that there was going to be another rate cut in December. That very much seems to be in doubt right now. And so these smaller companies, small and mid caps, are taking a bit of a hit there. We do have a confirmed Hindenburg Omen later on. I'll show you the chart of that. And then in the short term, we still have the CCI 20. It's a little longer term. There's a CCI 14 and a 20 that I use. The 14 has fallen off. The Stoke RSI, Williams Percent R, those are gone off of our short-term positive conviction list, but the CCI 20 is still there, and the stochastics, which there's three different subdivisions of the short-term time frame there, and so it's not a surprise to see this on the list. We don't have anything in the intermediate term anymore. All of that got worked off. That was starting to look extreme. And we did make a little bit of a change to the Fed scenario that the market and the Fed are still anticipating a soft landing, meaning that we're not going to go into a recession. And it didn't say there won't be a rate cut in December, but it wasn't said with as much conviction as what the market was leading itself to believe before. And so now, if we ever start getting economic reports again, the market will develop its own scenario. It's like, okay, weaker than expected. Maybe we're going to lean more towards a rate cut, or stronger than expected. Maybe not. But it's not as definite as the market had been showing this before. And I do weekend videos. There's a weekly update that I do, and I go through the Fed charts in that video to show what the market's thinking as far as the Fed funds rate. So the dollar was up, interest rates were up. We're at 4.09% with the 10-year yield. We were at 4.06%. Sentiment ticked down now. We had been improving. Even though the number itself had been negative, we were seeing the number going up, and it got up to 42. Well, with the decline on Thursday, we're back down to 37. So the context to that is shifting a bit more negative. We're still not trending in the short and intermediate term. We're below the moving average. We're below 20 with both the short and intermediate term chart. With the down day, the bias is negative, and I've changed the momentum back over to mixed just because we're seeing some internal weakness that's happening now. And the chart pattern is looking a little bit scary that I'll go through as well. Didn't have any economic reports due to the government shutdown, no charts to show you there. And this is put up by Real Investment Advice and then posted at IsabelNet blog charts. And we're getting kind of far away when you look at margin debt and then the deviation from the 48-month average of that, where we have the balance. That's the black line coming up here, and the average is the orange line, and we're getting kind of far away from that, little overextended. And that could end up being a little bit dangerous because it just shows that folks are using borrowed money to buy stocks. And when it's like, okay, everybody has bought that can buy, who's left to buy? And that can be when the market starts to run into problems and then we start to go down. These folks that you used borrowed money to buy stocks, they're like freaking out. Like, it works great when prices go in the direction that you want them to, and it really can freak you out when things go against you, and that produces more emotions, which can put some pressure on the indexes. All right, and then here's Carson's chart. Yes, the Fed has cut near all-time highs, and the bulls loved it. Going forward, pretty good results. The further out you go, you have to go out to a year before it's 100%. That happens all the time. But two-thirds of the time, we tend to see things positive going forward. That's not 100% though. There's still one-third of the time when we don't. And is this going to be one of those exceptions? We don't know that yet. We're just asking that question, critical thinking, just to say, okay, it doesn't necessarily mean it's automatic that the market's going to go up. Okay, then proportion of S&P 500 companies that are beating their earnings estimates, this is going up, and that's a low ball figure. And since we don't have any economic reports that are coming out, since due to the government shutdown, we're kind of having to rely on earnings and then anything that's coming out of these trade deals with Trump and Asia and all the different things that are happening there. And so they lowball. It's like, this is what we think it's going to be. And then they come out with a report and it's better than that. And then they look at forward guidance, and this is actually going up. And this is where a lot of the strength has been coming from, which is good. We like it when the market is more focused on earnings instead of just kind of hype and things like that. The US has been dominant with global equities most of the time, but not always. This is just some weighting. This isn't showing what's been going up or down. This is how much of U.S. stocks and other country stocks are figured into the mix here. Relative regional weights with global equities. It's based on the MSCI. It's a world ETF here. And at the very bottom, this is the US. And it's still, that's the place to be as far as the market is concerned. Of course, other countries can also look attractive at times as well. Zero-day options volume remains near its historical highs. I don't do zero DTE. It's like rolling the dice, in my opinion. But there's a lot of people that do, and it's a way to try to make some short-term profits quickly. You can also make some short-term losses very quickly as well. This actually helps us though, because a lot of the strategies that I do and I teach on the website that I have, which you're more than welcome to check out, it's free until the end of 2025. They're based around options, and we use options for hedging. We use options to make money. We have different strategies that are implemented, and we like when there's more options volume because the bid ask spreads are a lot more friendly, and it's easier to get in and get out if there's more volume. There's just more liquidity overall. So I don't see this as a negative. This is not a strategy that I implement, nor do I teach, but at the same time, the strategies that we do teach, it helps those to perform better just because when we're ready to make a decision, it's easier to get in, easier to get out. All right, S&P 500 sees longest streak above 50-day moving average since blah blah. I'm not into this comparison thing. I think it's like what was the context at that time back in 2011. But we've been above the 50-day moving average for a long time, and we were getting overextended. We're not now. We worked that off, and we're also getting far away from the 20 period moving average. But this shows a solid market, and I use the 50 period moving average to determine the intermediate term, and that's more the focus that I have. We watch the short term to see the fluctuations there, and we keep an eye on the long term, but everything kind of focuses on the intermediate term for a lot of the strategies that are implemented. And top 10 U.S. companies dominate the world market. Okay, not a real surprise there. Put out by Goldman Sachs. And go ahead and pause this if this is of interest to you. These are forecasts. This is Deutsche Bank sat down and came up with some kind of a spreadsheet here about what they think is going to happen with economic reports and so forth. So, okay, live large, pause the video, look at this. Or you can go to isabelnet.com and look at this chart yourself if you prefer to do that. Then 12-month and 24-month forward, so 1 year out, 2 years out with valuations. This is still coming in rather high here. A little bit more expensive just looking at 1 year because that's more closer to reality of things that are actually happening. Coming in at 19.7. And then looking at 24 months, we're at 17 and a half right now. Not necessarily overvalued because they're projecting what are the earnings going to be down the road, and they're a little bit more friendly. But this is all the world, not just the U.S., not just the Magnificent Seven, not just the NASDAQ 100 or the S&P. This is taking all world stocks together. All right, so had a lower open, and when I recorded this video at about this same time before Thursday, it was like, okay, it looks like we're going to have a pretty solid open. But then that got worked off. We ended up going negative with the S&P futures before the open, and that gave us a lower open here below S1. We were able to get back above that, and then we just pretty much hit resistance at this 68.75 level, chopped around here. We're in a non-trending environment, and so it wasn't a real surprise to see not a lot of conviction. But some conviction really started to enter later in the day. And this is when the professionals, they closed the market. They came in and decided to do some selling. That took us down below S1. Didn't quite get down to S2 here on the close. And we are up fairly strong, I think about a 0.75% as I record this, but that could change drastically. And when I'm recording this, it's even before Europe has opened. So there's going to be lots of variables that come into how the U.S. market opens in Friday's session. And we are going down now, both with growth and value here with the intraday chart for the S&P, where we were seeing some strength starting to build up. Now it's coming back down a little bit, but the blue line is still above the red line there. And we did pull back here, but we were seeing a nice little run up here with the S&P intraday growth of value, and that started to top out and now is seeing some weakness, but we're still above this green moving average here. So on an end of day basis, growth was down over 1.5%, where value was down about 0.5% for the large caps. About even, but a little bit more with the mid caps and a little bit more with the small caps as well. So seeing a bit of a pullback here, even though this growth to value ratio for the small caps looks pretty strong, it's not really helping the index all that much. There's little spurts along the way that maybe we can have some hope in small caps, and then that seems to get dashed pretty quickly. And coming down to the 50-day moving average with mid cap growth to value, this has been the growth to value ratio that's been holding up about the best of the ones that we look at. But you can see here, mid caps, not even back to the previous all-time high, and now starting to drift down a little bit. And we're still under the 50-day moving average with the growth to value ratio for the S&P. So we dropped down below that in August, and we've not really been able to get above it. And we're just kind of going sideways with this ratio, which is not showing a lot of weakness, but it's not showing the strength that we need to really drive the market higher, more than just a day here and a day there. This is looking better though, even though I pulled back. This growth to value ratio, it's a growth ETF and a value ETF, and there's a ratio between them. So this really broke out in Wednesday's session, but then it pulled back on Thursday. And we would like to see this doing better as well. Discretionary to staples. The bottom chart, we're still hanging out right around the 50 period moving average with the ratio. And we're under 20 and going down with the short-term trend. That's the ADX. The black line is the ADX itself. We are positive with the green line above the red line, but you can see how the green line's coming down and the red line's going up. If things don't improve very quickly, this is in danger of actually crossing back over negative. Also not trending in the intermediate term, so that's why I say implementing more market neutral type positions where we don't really care if the market goes up or down. We just want it to stay in a non-trending range with those strategies. And we are below 20 here. That's a static level that's used with the ADX, and we're also below the moving average. We're positive with the green line above the red line, but the green line is coming down as the red line is going up, just like we saw in the short-term chart. We are above average with volume. It dropped off a little bit from Wednesday's session, but still is above average overall. And here's looking at the gamma exposure. It's still all green here. This hasn't really picked up anything all that negative for right now. We closed at 68.22. We were watching the 6,900 level, but that really pulled back. And that was acting as overhead resistance, but we didn't get up there in Thursday's session. And so now, if we do go back up, we'll be watching that 68.50 level. And if we start to go down more here, then eventually you'll see some red start to appear on this chart if we see more declines. Of course, as we go up, you'll see these blue columns come up and actually start touching this blue line that's going across. And not much of a change with the VIX. We're a little bit inside the moving averages with the line chart as well as the bar chart. And seasonality, we just haven't been sticking to that. We supposedly, on a seasonal basis, would have gone up starting in August, September, and October, and then coming down. Well, we were pretty much flat during that time. Are we going to see a bit of a pullback and see the VIX going up, even though on a seasonal basis, we usually see that going down? Because seasonality, we're coming into the most positive time of the whole year. Is the market going to fool everybody this year? Just a question to throw out there. And the VIX of the VIX also, it's slowing down a little bit. We were seeing a bit of a pickup here with the VIX starting to move a little bit more, and that's what this chart tries to analyze. Pretty much at the moving average with the bar chart and a little bit above the moving average with the line chart, which is the closing value. So we're going up with this fear gauge, also going up with this other fear gauge. So there's some fear starting to come back into the market when we analyze it this way. We did get the latest reading from individual investors as not really a surprise. We had an up week last week, and these folks tend to react to what's already happened. And individual investors, that's you and me, and anybody that would be watching this video, they actually went above zero and are turning a little bit more bullish. Now, if we do get to the point where we're switching over and looking more positive, this would suggest that there's more room to go to the upside before, at least from this sentiment perspective, it's not exuberant at this time, so this could still go up. But if we end up having a little difficult time, then expect this to actually drop down below zero. Excuse my voice. Seem to have a bit of a frog in my throat now. So with the down day, we really picked up with the daily equity put call ratio chart, but we're still going down with the 5-day chart and the 10-day chart. Those haven't switched to going up yet. And not really seeing much of a change here. We're under the band with the volatility risk premium. So fear's not coming back in to the market by using this form of analysis. And we are coming down a bit here with the advanced decline line based on price and volume. Still very positive in the longer term, above these advancing moving averages. But we're below in more the short term with the advanced decline ratio. Both the blue line, that's 19 periods, and the red line, which is 39 periods, they are dropping below zero. Seeing a little bit of weakness coming in that way. We did tick up a little bit after we were coming down and almost getting to zero with the advanced decline oscillator. So that actually ticked up on a down day. And seeing a drop off in the new highs, it's still a pretty healthy reading, a big green bar here. But we've been seeing a real expansion of the new lows. And so internally, we're seeing some weakness as well. And we're going down with the 5-day chart and 10-day chart as well. In the short term with accumulation distribution, we've now turned negative. We've rolled over. We were a little bit concerned because we went above this red line. We started to roll over. Now we're crossing below the moving average. So short term is negative, but we're still positive in the long term. We will be positive unless we close below the red line. And smart money indicator number two. This was actually not really picking up an awful lot of strength. It was going down and it's negative as well. And the Chaikin oscillator, after rolling over a bit on Wednesday, now it's in more of a full-fledged decline. So at least on a short-term basis, our smart money indicators are now negative. And this is surprising. Even with the down day, the vortex, the green line went up and the red line was pretty much flat here. So this is still positive, but we're seeing a little bit of internal deterioration here. We're below the moving average. When we look at the advanced decline line studies with the NYC common stock, we're just about on the moving average with the S&P and seeing more weakness with the mid caps and small caps. And we really dropped on Wednesday with those stocks in the S&P above their 20-period moving averages. We declined, but not with a lot of conviction after Thursday. And a little bit of a tick down here. We're negative, though, with those stocks above their 50-day moving average. And we're dropping a little bit below, more below 50 here with those stocks above their 100-day moving average. And we're declining, but still above 50 longer term with the 200-period moving average study. So we came up about to this dashed line here, which is a pivot point. The cool thing about that is this is on the chart before it even happens. And we pretty much, at least for right now, could have topped out at about this place at this point. And now we're starting to come back down. Not turning negative yet, not really ruining the overall integrity of this series of higher highs and higher lows. We're just going to watch to see, is this going to develop into further weakness, or are we going to recover along the way and be able to turn and go back up? And we were above average with volume. So a little bit of a tick up with the 20, a little bit of a tick down with the 50, and a little bit of a tick down with the 200-day moving average on the S&P. So we were seeing positive conviction in the short term with the Stochk RSI. That's now coming down. The Williams percent are also coming down. The CCI 14 coming down. The CCI 20 did decline, but it's still above this blue line, showing positive short-term momentum. And we did decline, but we're still positive with the force index. And then the short-term stochastic, it's rolling over and it's actually more negative after being extreme. We're rolling over below the moving average with the intermediate short term, but we're still extreme. We're still positive with the long short-term stochastic, but now even it's starting to roll over. Still looking okay here. Even with the decline that we saw on Thursday, we haven't come back down to these moving averages with the bow tie approach. And we'll see if we do decline a little bit more here, are one of these moving averages going to act as support? So not really seeing much in the way of vulnerability to the short-term trend, at least yet. The lines are slowing down, but if we start to drop below that and stay below that, that's going to turn things more negative. But we're still above all the moving averages, 20, 50, 100, and 200-day moving, both simple and exponential moving averages that are plotted here. And we did decline, but we're still more than 10% away from the 200-day simple moving average for the S&P. and we came all the way back down. We were in the +3 channel. Now we're just starting to come into the +1 channel with the standard deviations chart. We kind of sliced through the +2 channel. Intermediate term, we actually ticked up a little bit with the balance of power. And this is still positive. We're still above zero. And we're still positive with the go, no go, with the darker blue bars, coming off of the highest high value and still above the midpoint. And still in an uptrend according to the Landry Light. We're on day 127. We're also now on day 5 of the proper order establishment of a new uptrend here. So that hasn't changed at least yet. Be aware of this chart though. It can hum along and look all positive and then it rethinks things a little bit and it can change. We're still going up with the TTM squeeze. That has remained positive. And we're still looking okay with the intermediate term trend based on 50 periods. Even with the decline, we're still above the red line and the blue line. And we have been moving rather quickly. That's what standard deviation tries to measure. Well, it's slowing down just a little bit, but we're still above the moving average. And this is strange. We were going up, and it's like the ease of movement just would not go above zero. We have a down day, and now it kicks up above zero. Kind of interesting there. All right, and we're still positive with the Arun. We're looking at the oscillator. It's still above zero. It's flattening out a little bit, but the green line is still above the red line, and that's why this gets a positive result here. And a little bit of a decline with the S&P McClellan oscillator, but we're still below zero, so that's negative. And so now we're going down based on price, and we were still going up a little bit based on volume after Wednesday. Now we're declining with both, and that's turning that a bit more negative. Also below zero and continuing to decline with the NYSE McClellan oscillator. So now we're turning down based on price and volume for the NYSE summation index. Still going down based on price. We were trying to flatten out and even go up a little bit with the Swindler trading oscillator based on volume. Now both are back to declining, and that's negative there. We've gone from positive over to neutral with the Elder's Impulse system. We're still positive with the parabolic SAR. We're still positive with momentum. See, the PMO is still going up, but when we break it out based on price, we're starting to drop below the moving average. We're rolling over, but we haven't crossed below the moving average based on volume. So seeing a little bit more of a deterioration with the PMOs that are rising inside of the S&P. We're still declining with the buy signals, and we're rolling over a bit with those PMOs that are above zero. But the momentum, see, these move slower, and so they really haven't picked up a lot of this negative action over the last couple of days. Well, we were unchanged on Wednesday, and then we declined on Thursday. So we're still looking positive. We're above this green line here, which is rather extreme, but you can see we can go way above this green line and stay there for quite a while. We're also still positive with the MACD. So we're positive in the short, intermediate, and we're turning back up with the long term. So the momentum indicators are still positive. And we're positive with the Copic curve. We're coming down a little bit here. We're no longer extreme with the Sean trend meter. And we're still above 50 with the money flow and ultimate oscillator. And we're still above the moving average with unbalanced volume. We're no longer extreme with the short-term RSI. That's now pulling down. That is now an official overbought signal once it crosses back down. We never did become overbought in the intermediate term, but now this is also declining. And we continue to decline with the bullish percent index. We saw a big drop on Wednesday, a further drop on Thursday, and we're below the moving average. Now it's going to turn even more negative if we end up dropping below 50. And we're coming down, but still above 50 with the NYSE bullish percent index. We are declining a bit, but still above 50 with the NASDAQ 100 bullish percent index. And we're working off of a mass index reversal signal. Is this going to turn into something? We were going up, which generated the criteria for this particular signal. Now we're starting to come down. We'll see if that ends up leading into something more. But we're still working off of a praying bottom fisher buy signal. So we got a reversal signal, which is negative, and a buy signal here, which is positive, generating at the same time. So I'm not showing any support or resistance right now. We're watching moving averages, anchored weighted moving averages, and we're still well above those levels currently. And we're turning a little more negative with the Heiken Ashi with the black candle. We're positive since we're black, but now we're pointing down with the Kigi chart. But the Renko chart is still positive, and we're still positive with the three-line break chart. Then long term, we're seeing a bit of a drop down here with the 150 and 200 period moving averages. A little bit of longer term weakness that's starting to creep in. And we are negative in the short term with the mid caps, but all the other indexes are positive on all time frames. And no changes here. We're still looking more positive in the short and intermediate term with the dollar, which if that keeps going up, that could add some pressure to stocks. And we only had real estate, financials, which were up a little bit, and healthcare. Two of these three areas are more defensive, and the financials just been getting hit pretty hard. All of the other sectors ended up being down, with discretionary leading things down, and communication also going down, and tech. These were the stronger areas on Wednesday, and they're more the tech, discretionary, and communication were the weaker areas on Thursday. So a lot of red here with the Nasdaq going below 23,986. The Dow did manage to try to get back above 48,000, and we had a BPI cross back above 50 with the energy sector after just having a BPI cross below 50, a negative signal. We're seeing a little bit of a pickup there. And then gold, at least for the futures contract, not the ETF, but the futures, they're back above 4,000. So big red here. Amazon, Tesla, that hit discretionary really hard. We had Microsoft down, Nvidia down, that hit tech pretty hard. We had Apple, which reported earnings, but they are positive here. But so we'll have to see how things play out in Friday's session. And then with communication here, we had Google. Both Google stocks were up, but Meta was down. And so the Dow pulling back after really recently setting an all-time high, down 0.25%. And we've gone from positive to neutral with the Elder's Impulse system for the diamonds. Starting to come back. We hit this overhead resistance area here, tried to get a little bit above it. Now we're coming back down with the NASDAQ and also switching over to neutral with the Elder's Impulse system, coming down with the NASDAQ 100 and also from positive over to neutral with the Elder's Impulse system. But the momentum for the NASDAQ 100 continues to be positive. And pulling back now with the S&P 600 small caps coming back down and starting to deal with its 50-day moving average. Also pulling back with the Russell 2000 small caps starting to drop below 50 with the RSI. The MACD, which never did turn positive, it's continuing to be more negative. But we're still above the 50-day moving average here with the Russell 2000 small caps and still in a longer-term uptrend. But we've gone from neutral over to negative with the Elder's Impulse system for the small caps, dropping below the 50-period moving average with the mid caps, and also turning again negative for the second day now with the mid caps. And after setting a recent all-time high, the Wilshire 5000 is now pulling back. It was down 1%. We also are seeing a little bit more than 1% decline with the U.S. total U.S. stock ETF. And we're just continuing to see prices below the 50-day moving average, even though the financial sector was up 0.25%. So a little bit of a tick up here, but we just really came down in Wednesday's session with the ratio between the financial sector, the S&P. So we probably seeing a little bit of a buy the dip or bottom buying there. We'll see if that continues to improve. And the FANG index, after setting an all-time high, it was down 1.79%. So Apple, this was all happening before they reported earnings. They were up almost 2/3%. Then Amazon was up 3.23%, trying to get back up to its 50-day moving average. And Microsoft was down 2.93%. They also, it's just crazy how these folks react to this. And seeing some real strength here, but closing well off of the high with Google. And Meta got hit. It's actually dropping underneath its 200-day moving average. Apparently, there's some concern that the earnings for Meta are good, but they're going to be spending all this money going forward with AI, and it's like, okay, how's that going to hurt the company? And the market didn't really like that, at least at this time. Then Nvidia was down 2% after setting an all-time high there, and Tesla down 4.64%. Still pretty much range bound lately. Then Netflix still continues to have problems, dropping underneath its 200-day moving average. So still seeing a little bit of a deterioration with the short-term correlation between world and U.S. stocks, still holding up fairly well with the longer-term correlation, still coming down for the most part. Now, this is a weekly chart, so it won't be finished until after Friday's close, but this ratio is coming down with gold pulling back recently. And then oil was down 0.31%, getting down into the 60 range. And we are going up here with the dollar. We really haven't been trending over the last couple of months. It's really choppy right now. Well, we'll see. Any more strength here, especially if we break above 100, that could put some impact on stocks if we see more dollar strength. And then we're going back up here with the 10-year yield. We want to keep an eye on that. We're seeing kind of a pattern here. The Fed comes in and cuts rates, and then the 10-year yield ends up going up. Well, that happened on Wednesday, and it happened again on Thursday. And so we're going down with the 10-year based on price. Now, this growth to value ratio of Qs to S&P, even though it pulled back, still looking pretty solid. But discretionary to the S&P, not looking very good here. And we're still looking okay, even though we pulled back when we compare large cap growth to value. So coming down took a bit of a hit here with the large caps, but still above the moving average, dropping below the moving average with the mid caps, and a little bit of a tick down here with the small caps. And then here's the Hindenburg Omen. If you don't know what that is, here's the criteria for that. And now we have another spike. We needed to see another spike before November 7th. Well, we now have one that was generated on October 29th here. So this could be negative. And you see other times now, especially if we start getting other spikes here. This is just one confirmation. But what we were seeing at the end of really right before the COVID crash, we saw a whole series of spikes here, and then we just went down ferociously. And then we came up out of that. And then at the end of 2021, we started to see a series of spikes over a period of time. And that took us into the bear market of 2022. And then we've just seen isolated spikes here, which did not meet the criteria. Now we have one for the first time in quite a while. So is this really going to turn into something? So what's our outlook then for Friday? Both Apple and Amazon did report after the close, and I was tracking them. I think one was up, the other one was down, but that can change a lot before they open on Friday. We're still positive on all time frames when we're looking at the moving averages. We haven't dropped below those, at least yet. Now we're supposed to get all these economic reports here, but who knows? I mean, what's going to happen there because of the government shutdown and then all the geopolitical things. Anything that comes out concerning US China, US Asia, those things that the market seems to pay more attention to. And then here's what's supposed to be the economic calendar here and here, but we've just totally deviated away from that. Now, seasonality for October 31st, neutral to positive for the Dow and S&P, neutral to negative for the Nasdaq. So really no heavy leaning there when we go back to 2002. And we do see a little bit of positive seasonality going into the last trading day for October during post-election years. And we are dealing with the second half. We're starting to finish that out. And then I marked over here, this is the first half of November, which tends to perform pretty well. This also shows positive seasonality going into the end of the year. But is everybody just expecting that? And so the opposite is going to happen. Also seeing positive seasonality here as well. And then this also shows positive seasonality going back to 1928. And we are coming down, but still seeing a lot of companies that are in their blackout periods because they can't announce buybacks while they're reporting earnings. And this also shows how November tends to be about the strongest month of the year overall. So we're now on the negative side with our three smart money indicators. And the short term accumulation distribution is now negative, Chaikin money flow and Chaikin oscillator. Those are negative as well. And we're negative with the S&P and NYSE McClellan oscillators and summation indexes. Swell trading oscillator, it's not mixed anymore. It's now declining based on price and volume. The bullish percent index for the S&P. We do have a confirmed Hindenburg Omen, which was generated on October 29th. And then this mass index reversal, just kind of feeding into all of this right now. On the positive side, though, the parabolic SAR and the momentum oscillators are still positive. Now, again, I keep pointing this out. We're concerned in the short term, but longer term, we're still in an uptrend with the growth to value ratio and discretionary to staples, but they're not really showing a lot of strength right now, shorter term. And since we're above 50, we're positive with the NASDAQ 100 and NYSE bullish percent indexes. And the ease of movement came back above zero. Go figure that one. The money flow, even though it declined, as did the ultimate oscillator, they're still above 50, so they're considered positive. The vortex is still positive and actually improved on Thursday. And then the financial sector is still in an uptrend by itself, but continuing to underperform the S&P. The momentum for the Nasdaq 100 is still positive, and the long-term special K oscillator, which I'll cover in the weekend videos, that continues to be positive as well. And here are the pivot points for Friday's session. So our conclusion, we're still positive when we use moving averages to base things there. The momentum that we were seeing that was positive in the short term, that's now gone. That's been wiped away, and there is weakness developing. Now we can get that back with a good solid update, but it's at least after Thursday, it's not there anymore. And we're still positive in the intermediate term, but we're also starting to see some weakness creeping in there. We're positive in the long term. Even with the decline, though, we're still more than 10% above the 200-day simple moving average. So we want to keep an eye on that one as well. So thank you. Have a really good day, and I will talk to you in the next video.